Welcome to ForexTV.com. Today's Tuesday, July 21st. I'm Tim Kelly with the New York Forex Market Buzz. Currency traders appear to be shedding risk positions after statements this morning by Fed Chairman Ben Bernanke, and the dollar and yen gained. U.S. equity markets also turned lower after opening on the upside. Gold is down marginally, and crude futures are slightly higher. The yield on the U.S. government 10-year note is 3.47%. That's down 12 basis points. Federal Reserve Chairman Ben S. Bernanke said while the economy is showing tentative signs of stabilization, the central bank intends to maintain a highly accommodative monetary policy for an extended period. He said the pace of decline appears to have slowed significantly. That in statements in the semi-annual testimony before the House Financial Services Committee, he'll be in front of the Senate tomorrow. At the same time, he said, in light of the substantial economic slack and limited inflation pressures, monetary policy remains focused on fostering economic recovery. Fed officials said in a report submitted as part of Bernanke's testimony that the policy will be tightened when the labor market improves, an economic recovery takes hold, and pressures holding down inflation, quote, diminish. The comments follow a rally in stocks and a rebound in corporate earnings that have stoked speculation the worst recession in half a century is ending. Today we're joined by Greg Michalowski, VP of Trading and Liquidity at FXDD. Hey, Greg, welcome to the program.
Hey, thanks, Tim. Thanks for having me.
Always a pleasure, Greg. Hey, Greg, I mentioned in the opening statement here that we're seeing risk come off. I'm looking at euro right now, seeing a little bit of a give back after the last couple of days. What's your take here? I know you're looking at the charts right now.
Yeah, you're exactly right. We are seeing some risk come off the table here, and what that has meant in recent times is you see a decline in things like the euro. You see a decline against the you see sterling go down. You see some of the commodity currencies and commodities come off, and all of this, sort of is a pattern that we've been seeing in the market. So specifically against the euro, we were in a channel over the last day and a half at the top after moving higher from July's lows around the 138.33. We moved to a high today at 142.76. This broke above the channel that I was targeting or had on my over the last few days, and the move higher led to very people scrambling for the tops, and then the market started to come off as the chairman spoke, as stock prices started to come down, and we moved back to within the channel. Currently, we're testing the low end of that channel, which comes in around the 141.67. Current price trading at 141.69. Below that, I have other support at what I always look at the 100-hour moving average, and that level comes in at 141.49. So we seem to be holding the downside, but disappointment on the move to the upside, the break to the upside today, which will probably pressure the euro in the short term, I believe.
Hey, Greg, so I'm just looking at the charts right now. So just looking away here on. Back on the 3rd of last month, we made a high in the 143.30 range, and seemed to come up shy of that. What do you suppose on your charts? Do you see any significant resistance up there that we should be looking at?
Sure. Anytime you get near an old high, and that is the high for 2009, I believe. So we're gonna. You're gonna run into that resistance up there, and the market tends to, especially in this day and age, tends to look for areas of low risk, potentially high reward, and so they'll look at these resistance areas and sell against it with the hopes that perhaps the market will not be able to extend the gains, and they'll get the move down just on the as the market sort of non-trends and goes up and down. We do see a lot of this up and down movement as of late, and what the traders are doing is just trying to find those low-risk opportunities to sell. So they come in at 142.76 with a stop if the price should extend above those June 3rd highs or early July highs. And if it ends up holding those levels, then they have a nice gain on the trade.
Okay, you know what, Greg, thanks for that. I'm looking at right now sterling, And looking at the channel that's been making over the past couple of weeks, probably about 3 weeks almost, with that high in the 65, the 66, the figure area, down to the 6170 area. What's your take on sterling at that point? Right now it's a pretty strong and tight range, day up, day down, day up, day down, and so forth.
Yeah, exactly. We see the high that that occurred at the end of June. That happened at the 167.43, and then all during June, whenever the price got above the 166 level, I think we had a high of 166.61 initially. Then we had a high of 166.20, had a high of 166. And then toward the end of the month, we broke out to the high of 167.43. But what's interesting to me as far as the sterling versus dollar on a daily chart is the high close hasn't been anywhere near the above the 166 level. In fact, it's come in at 165.89. Today we hit a high of 165.52. Yesterday we hit a high of 165.55. So I find there's good resistance up there against the 166 level that remains, and so we see the moves higher yesterday, and it's all reverses today, and that's not unusual. But from a technical perspective, the inability today to extend to the upside to make a run at that 165.89 level has me a little bit more cautious on the sterling versus the dollar. We went through some support levels of the last move higher at the 164.09 level, and we tested the 61.8% retracement of the move up from the July 17th high to the high that we saw yesterday, and that comes in at the 163.75. So from a short-term perspective, I'm more bearish on the sterling versus the dollar, and if we can get through the 163.75, that will just confirm the downside for my biasness.
Okay. Hey, Greg, I'm now just shifting gears so we can get a couple more in here. Looking at dollar yen, talking about the risk trade here, dollar yen just doesn't do what anybody thinks it's going to do almost ever, in my experience. So I'm gonna stick it to you here. See some support at that 93.20 level, and trading just above that right now. What's your take there?
Yeah, you're absolutely right. That's why I prefer to look at the technicals as far as the dollar yen and let the pictures tell me the story rather than what you might think might happen from a fundamental standpoint. But you're right. There is support down there at the 93.25 level purely from a technical perspective. If you take the move up from the July 13th low to the July 20th high, the midpoint of that move comes in at 93.25, and today's low came in at 93.28. So the market found some support against that 50% retracement. You can also go back and look at the lows on July 16th, the low on July 15th. Those levels came in at that level as well. So there's basically two or three different reasons to find support at the dollar yen, and guess what the market did? It found support at that level. We found the buyers. Don't try to put any fundamentals to it, and the market started to move higher. Currently, we're trading at 93.50, and so we're seeing the correction off of that level, and we'll be watching the 93.25 level on the downside. But right now, I'd be a buyer on dips against that level.
Okay, great. Hey, Greg, I know you've been watching Kiwi too. That seems like one of the big movers today. Made a low of 64.93 and a high of 66.09, but couldn't really hold the figure. Trading at 65.19, kind of in the middle range here. Why don't you give us a quick insight into what you see happening there?
All right, the high for the day, you mentioned 66.09. That surpassed the high for the year. I had 65.92. It might be 92 to 95, something like that. So it took out the highs for the year by about 10 pips today. We're not able to sustain that gain above those new highs, and we're now down on the day for the New Zealand versus dollar. This is not good from a technical perspective to see that. The good news, however, is we've held the 100-hour moving average. The market has been above the 100-hour moving average since July 13th. When it broke above at 62.80. The current 100-hour moving average comes in at 64.89. The low today came in at, let's see here, 64.97. So we got within about 10 pips of the 100-hour moving average and bounced higher from there. So for all your listeners out there, keep that moving average in mind on the downside. If the market is able to break lower, which the failure at the top may give it more of a impetus to move lower and correct lower, then I think we see lower levels in the New Zealand versus dollar, perhaps down to the 64 level in that currency pair.
Hey, Greg, thanks a lot for that. Always a pleasure having you on here. Thanks so much for joining us.
Hey, thanks for having me, Tim, and have a great afternoon.
Will do. That was Greg Michalowski of FXDD. If you'd like to talk to Greg directly online, just click on this video or go to just go to forextvconnect.com and you can leave your messages for Greg, ask him questions. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on forextv.com.